The jobs data keeps jolting these investors around. It is Tuesday, March the 31st, and this is Markets with Megan. If you like this podcast, please subscribe, hit the alarm bell, share it with your friends, family, or colleagues. But we're here today to talk about the February JOLTS report, and this is the jobs report where we look at the amount of job openings that are in the economy. And this is important because we've looked at this a lot in the past and compared it to the amount of people that are unemployed. Now, remember, in January, we got a big uptick in this report. So there was a lot of optimism around the labor market, but we did give that back in the month of February. We saw that job openings fell the most by the most in about 17 months. It was 358,000 job openings that were lost. We now have 689,000 more unemployed Americans than we do have jobs posted. Now, when you look at the hiring rate or the ratio of those hired to those offers that are out there, that actually fell to the lowest level since April of 2020. And prior to that, you have to go all the way back to 2010. The quits rate, or those that are voluntarily quitting their job, this dipped back down now. It's matching those lowest levels we've seen since 2020. So remember, when that rate is going higher, it means that people are more confident about job prospects and they may be quitting their job before they have another job. That's coming back down. So less optimism here about the job prospects that are out there. The pullback we saw was in accommodation, food services, healthcare, social assistance, and manufacturing. But we also did get weakness in hiring in construction and leisure and hospitality, and that might be weather related with that data. Remember, it was February, which there's a lot of distortions there because of the weather. Now, this is kind of the introductory report we get. We will get March's payroll report this Friday, and that will probably get a little bit more market reaction because that's really what the Fed's going to be looking at. And today the market's up significantly, not necessarily because this data does show weakness in the labor market, which might open the door for the Fed to be open for rate cuts, but more because there is possibly, and I say possibly because it changes every minute, some positive news out of the ending of an Iran and the U.S.-Israel war. Again, this is a very fluid situation, but we'll be back to give you updates on that. Now, tomorrow we'll also, with the first of the month and the start of the second quarter, we'll get data on retail sales, and that's important because that'll be February's data, and we will want to see if the consumer continues to spend in the month of February after we saw a pretty solid January. That's all we have today. If you want a history of our podcast, you go to marketswithmegan.fm. Thank you.